Hello, and thank you for tuning in to the third panel session of this year's BIS Innovation Summit. Today we are focused on developments in the cross-border space, including those of the public and private sector. My name is Andrew McCormick, and I am the head of the BIS Innovation Hub here in Singapore. If we zoom out, over the past 20 years, we've seen increasing investment and digital disruption in both domestic and cross-border payments. From innovations on the card network side to fintechs and the emergence of digital banks and the introduction of instant payment systems in over 70 countries around the world. Much of this transformation has indeed been spearheaded by the private sector, which has the DNA to innovate and seize market opportunities and gaps and inefficiencies within the cross-border space. Yet cross-border payments are a complex and multi-dimensional ecosystem, a problem that requires global scale coordination and indeed the involvement of central banks and international organizations. So that is why the BIS has made it a priority to improve cross-border payments, working through recent efforts with the G20, the FSB, the CPMI, the IMF, the World Bank, and FATF, as well as industry, to make enhancing cross-border payments a top priority since early 2020. The goal of this roadmap is to make cross-border payments faster, cheaper, more transparent, more inclusive, and essentially to bring widespread benefits to citizens and economies worldwide. So with that, it gives me great pleasure to be on this panel with these esteemed panelists and break down this important topic over the next 45 minutes. I'll first introduce the panelists. First, we have Catherine Gu, head of CBDC and digital currency at Visa. Next, we have Governor Thomas Jordan, chair of the governing board of the Swiss National Bank. Governor Jordan has had a long and distinguished career at the SNB and published numerous articles on monetary theory and policy. Next, we have Sir John Cunliffe, Deputy Governor for Financial Stability at the Bank of England. Deputy Governor Cunliffe is also the chair of the BIS Committee on Payments and Market Infrastructure, the committee responsible for the cross-border payments roadmap, which we will indeed talk about shortly. And last but not least, Tony McLaughlin, Managing Director for Emerging Payments and Business Development at CITI, and a recognized thought leader in the payments ecosystem. So John, I'd like to maybe start with you and kind of set the stage. There's numerous public and private initiatives in payments and cross-border payments in particular. And obviously that includes the CPMI comprehensive roadmap being led by the CPMI. So if you could give us kind of an update on what the current state of the G20 efforts and the G20 CPMI program is at today, and how have you approached collaborating with the private sector, and what are the top priorities for the program in 2022? Over to you, John.
Thanks very much, Andrew. Thanks for the opportunity to speak. I mean, just to recap, it was 2019 when the G20 leaders made improving private sector, improving cross-border payments a priority, just recognizing that the cross-border payment system was slow, inexpensive, unreliable, and limited in access. It was 2020, they endorsed a roadmap of 19 building blocks to tackle the different sorts of frictions in infrastructure, in regulation, in the private sector to get there. And then last year, 2021, G20 leaders endorsed quantitative outcome targets for cost, speed, transparency, and access of cross-border payments, and those targets to be achieved by 2027. And those targets actually anchor the whole program. They say, where do we have to get to by a certain date, and they enable people to hold us to account. And I'll go in a second as to who us is in that sentence. So where are we? Well, I could go through all the 19 building blocks in turn and where they are in their actions. I think that probably wouldn't help the panel very much. Suffice it to say, we're on track. And over the last year and a half, we've put together the teams and the work streams to do this. And we've also done a huge amount of ground clearing. And a lot of that has been about just surveying and stock taking. I think we've done 13 stock takes. What actually exists at the moment, what the foundation is for the improvements that we need. But we're now entering what I call the business phase of this program, where we have to turn that understanding of what exists at the moment, detailed understanding of where the frictions, where the barriers we need to tackle are. We have to turn that into proposals for change, and then we have to implement those changes. So to answer the question in the title, of this session, this is, and it has to be, a public-private partnership. So the public sector is responsible for the central infrastructure, which is at the heart of payments. At present, almost all cross-border payments settle in one way or another on the ledgers of central banks using their RTGS systems, and regulations set by the different public sector authorities, they set the constraints, the operating standards, and the regulation for payments and for financial firms. And it's not just financial regulators here, it's other regulators, for example, data, AML, CTF, illicit finance regulation. But the vast bulk of payments and payment services provided to the public are provided by the private sector for the reasons I think, Andrew, you gave in your introduction, and that's especially true on a cross-border basis. And I just observe in passing that even for prospective developments like central bank digital currencies, the general consensus that has emerged in most jurisdictions is for a public-private partnership where the public sector provides the central infrastructure, but it will be the private sector that provides the interface with the public and the actual payment services that would come through the use of a CBDC. So the G20 initiative has to be, by definition, a public-private partnership. For either the public sector or the private sector to do it by itself would be like clapping with one hand. It simply wouldn't happen. So on our side, I said I'd talk about what is the us. On our side, on the side of the public sector, and that's broader than central banks, we need to tackle the frictions that are generated in the central infrastructure and the way in which we operate that central infrastructure. And we also need to tackle the frictions that are in the regulation and the standards that we set. But the private sector needs to invest in its infrastructure. To give an example, if we extend the opening hours of central bank systems, there's no point if the private sector keeps the opening hours where they are at the moment. And crucially, the private sector needs to have the incentives to seize the opportunities that we would open up to provide better services. And here I think we come to a key driver that is often forgotten in this programme, which is competition. So I'd say there are a number of reasons why cross-border payments are where they are relative to other areas of the financial sector, why they've lagged behind. But a major reason, I think, has been the lack of competition in this market. So on our side, when we tackle the frictions, we don't just have to tackle the constraints that our infrastructure and our regulation create for incumbents who provide cross-border payment systems and services, but we also have to tackle the barriers to entry that new players face. And that's got to be part of the work on infrastructure. So there will shortly be a report coming out on access to central bank systems and whether that can be widened to include non-bank as well as bank players. Very difficult issue for central banks, but one I think that needs to be addressed. And we need to deal with it also in the standards we set. We have to ensure there's a level playing field in both directions to enable competition so that we can bring in new players with new business models to provide competition in the services. And I think if we do that for incumbents and new players alike, we increase the incentives to adapt and exploit new technology. We open opportunities for people to address underserved parts of the market. And as people find ways of exploiting new revenues, we will actually attract new capital into this area. So to go back to the title of this, the private sector can't do it by itself. It needs the public sector to address the frictions in infrastructure, in regulation. It also needs the public sector to address the barriers to competition so that the private sector, and the private sector here means more than just the incumbents, the private sector as a whole can actually deliver to the public the improvements we need. I'll stop there. Thanks.
Thank you for that, John. And I think that's really well said. And maybe to get a private sector perspective, I'll go to you, Catherine, next. Obviously, Visa is a globally recognized card network brand and has been very active in the cross-border space for many, many years. And I think Visa continues to innovate with a variety of initiatives that have been announced recently around e-commerce and push payments and even some work in the CBDC space. So could you maybe talk about how Visa approaches collaborating with the public sector and what are the top innovation priorities for you this year and over the next few years?
Absolutely. Thank you very much, Andrew, for having me, and great question here. I think, we tend to think about payment as a kind of a pyramid. And at the very foundation, this is where the core requirements such as resiliency and security comes into a lot of the play here. And absolutely echoing what John has just said, the public sector here plays a huge role in the beginning in terms of setting those expectations, standards, and regulations, and really trying to enable an environment for the private sector to build out these sort of core requirements as such. So as an example at Visa, resiliency is very much continue to be at the very core of our innovation, along with the rest of the products that we're launching. And we like to, pressure test the system and networks very regularly. And what we like to maintain is this so-called 6 nines. So what that means is actually back in last year, FY21, our network has been available for payments nearly 99.9999% of the time, which is translated to pretty much less than 1 second of downtime every single week. We also, heavily invest, I would say, in cybersecurity, for example, and each year that results in prevention of fraud to about $25 billion. Now, if you look at the next level of this pyramid, is what we see about openness and accessibility for the payments. And especially, in a time of change like we're living right now, I think, optionality is really important, and so is competition 100%. And so payment networks really need to be open. And this is where the policymakers can also encourage this type of openness and competition, whether that's coming to technical interoperability, network interoperability, or regulatory interoperability. These are all super important. And then you move on to the very top of that pyramid. This is where, the payment ability enables different kind of experiences. And these experiences come from, say, specific persona, use cases, and user flows in different type of scenarios. And this is a bit, I think, the private sector should lead in terms of the innovation, and where we believe the public sector can support by encouraging those innovations to continue to flourish and really to build new ideas on top of that. And so I think that comes to, in terms of our, innovation priorities for the next few years. I guess I can highlight a few. So I'm part of the Visa Crypto team, and, digital currencies and CBDC definitely form a larger conversation around the future of money. And I think CBDC is still a very nascent kind of concept. And we're actively doing work here to trying to drive things such as, thought leadership, contributing towards the public discourse around this topic. And more importantly, as we get more familiar with, the discussions and so on, we're trying to move from thought leadership more to sort of experimentation, piloting, together with our partners to leverage different capabilities and so on to test for very specific use cases when it comes to digital currencies. Now, in terms of the broader picture of what we're doing, I would highlight the Visa Direct team, which is the fast and secure push payments platform, and it enables our partners and FIs to really offer real-time P2P, B2B, B2C, and G2C type of payments. So now we have over about 5 billion bank accounts and cards globally connected to the platform. And I think the key initiative, actually, next step is to actually linking Visa Direct to digital wallets, and with a specific focus, actually, to enable those without bank account access in the conventional sense to actually get access to the Visa Direct network, and hence, focus very much around this financial inclusion aspect. And then the last bit is really around Visa's B2B Connect, which is another new, I guess, multilateral network that was started back in 2019, and is really aimed to deliver high-value B2B cross-border payments for FIs and institutional and corporate customers. It's available currently in about 104 countries, and we're aiming definitely to kind of explore that further. So I think these kind of give you a good picture in terms of the innovation, and we'll continue to kind of actively involved in a lot of these public-private sector initiatives.
Great, thank you, Catherine. Thomas, I'd like to go to you next. And the SNB has been indeed very active as well in payments innovation. I think recent collaborations that come to mind with Six SDX and that platform, the work you've done with Banque de France, and of course the BAS Innovation Hub Swiss Center. So could you maybe elaborate on some of the key problems the public sector authorities like the SNB are looking to address and how you approach collaboration with the private sector?
Well, thank you, Andrew. And let me also thank the BAS for inviting me to this interesting panel. Well, innovations in payments have recently received a lot of attention. We heard that from Catherine and also from John. But actually, technological change is not new to central banks, nor is a close collaboration with the private sector in technological matters. Well, our main motivation for getting involved in payments innovation relates to the fulfillment of our mandate. Our mandate includes facilitating cashless payments, and because cashless payments provide the so-called plumbing for financial markets, they're also important, of course, for monetary policy and financial stability. Well, we believe that the private sector should, in general, take the lead in driving innovation and creating new payment services, especially for retail payments. It is, however, essential that we as a central bank maintain a very constructive dialogue with the private sector for mainly two reasons. First, we want to better understand the new technologies and how they may affect our mandate. And second, we want to continuously develop our payment infrastructure, but also to ensure its stability. Now, our payment infrastructure should always provide a solid basis for financial markets and thereby foster competition and innovation, very similar to what we have heard before. So it should be really the state-of-the-art core of the financial infrastructure. In our experience, it is easier to implement innovations within an established domestic framework. Doing so in an international context requires a lot more efforts. Let me give you two examples of payments innovation and how we collaborate with the private sector. The first example is about innovation within our existing legal framework, and the second example focuses on innovation that stretches the current legal framework. The first example concerns our payments infrastructure, our RTGS system. We continuously develop this infrastructure in close collaboration with the participants from the private sector. Currently, we are working on instant payments. In other words, we are developing the infrastructure needed to enable payments in real time and around the clock, where settlements take place in central bank money and on a gross basis. These innovations are taking place within our existing tried and trusted legal framework. They are not experiments, but these innovations are implemented directly. Now, the second example is our collaboration with the BAS Innovation Hub and the Swiss infrastructure provider SIX. Last year, SIX launched a regulated DLT-based exchange and central securities depository. Together with the BAS Innovation Hub, we partnered with SIX to issue a wholesale central bank digital currency in 3 proof-of-concept projects, Project Helvetia 1 and 2, and the Project Jura. Now, Project Jura, carried out in conjunction with our colleagues at the Banque de France, allowed us to study DLT for cross-border transactions. The project demonstrated that it is possible to retain control over our currency on a shared platform. Although the technology is new, the biggest challenges concern the legal framework. For instance, which legal framework should govern a cross-border transaction? In all these projects, collaboration with the private sector has helped us to better understand the technology and its potential. But it has also helped us to identify key policy questions. The private sector often brings in alternative perspectives and ultimately helps to develop better overall solutions. So I stop here, Andrew.
Great. Thank you so much, Thomas. Tony, you've been waiting patiently. I really appreciate it. And I think we've heard that we're in violent agreement that the private sector has a major role to play here in the future state of cross-border payments. But from CITI's perspective as a longstanding correspondent, it seems to me that you do kind of face the classical innovator's dilemma in that, innovation is indeed key to our collective mutual, success, but that does indeed require some level of disruption. So perhaps you can expand a little bit on how CITI approaches this innovator's dilemma and what your priorities are in the cross-border space.
Yeah, thanks, Andrew. Thanks also for the invitation, and congratulations on all the great work that the BIS Innovation Labs are doing. I mean, the portfolio of projects that you guys are doing is really admirable and leading the conversation. So thank you for that work. The innovator's dilemma might seem like a bit of a bind if you consider the payments market to be fixed and really that the competition is a zero-sum game. But that's not the case. The digital payments market is growing dramatically. The cross-border payments market is growing dramatically. And what we see over time is a tremendous increase in volumes, while interestingly, the average values of transactions flowing through our pipes changes and gets smaller. And it's not too difficult to understand why that happens. There are lots of business models that are net new, such as ride sharing that didn't exist a decade ago, and those types of innovations in the digital economy have created hundreds of millions of new cross-border payment transactions. So we've seen enormous innovation take place in the payments market over the past, I'd say 10 years. I've been in the payments business for 30 years. It's only really been cool for the past 5 years, and I'm really happy about that. I'm glad that everyone's paying attention to payments. It wasn't always the case. We were very much in the boiler room for quite a long time. But if you look at the innovation that's been brought by the community in terms of SWIFT GPI, if you look at the waves of innovation delivered by the schemes like Visa and MasterCard in terms of tokenization and a range of other services on those networks, if you look at the fintech innovation in wallets, it's been enormous. But that's not to say that we can be complacent, because frankly, we're at this inflection point where sovereign currencies are being challenged by novel forms of money, by non-sovereign currencies. And these non-sovereign currencies operate globally, instantaneously, and programmatically. And so the reason why we need to double down on this public-private partnership is the community which is vested in sovereign currency needs to make sure that we do not suffer any functional disadvantage or technical disadvantage versus non-sovereign currencies, because we don't want to see traffic migrate across that gradient. And so this is really a time where the public sector and the private sector must come together to solve the problems, but also we mustn't misdiagnose the problems. And some people will say that international payments are slow, and therefore they might point to one aspect of how international payments are made, which is the messaging layer. And I have to point out that messaging in cross-border payments is not the problem. SWIFT messages, for example, they're communicated at the speed of light. Blockchains don't communicate between one point of the world and another point of the world any faster than a SWIFT message. So what we must do in this exercise, and I'm really pleased that the work that's been done by the BIS and CPMI has recognized that there are no silver bullet solutions to fixing cross-border payments. It's a stack, it's a package of measures that need to be implemented in partnership between the public sector and the private sector. But let's not reach for easy solutions that seem to be, silver bullets, because in the world of cross-border payments, we're not going to find a single measure that solves all problems.
It's really well said, and I think probably speaks to why the cross-border payments program being run by the CPMI has indeed 19 building blocks, and most of them are, in fact, nothing to do with technology and everything to do with business process and other issues, obviously. So, several of you have touched on a blockchain and central bank digital currency. So maybe we can go there for a minute and just kind of unpack that a little bit. And I'll go to Thomas and then to you, Tony, again. My team here in Singapore has recently published a report on Project Dunbar, which is a common vision for a DLT platform and a kind of multi-CBDC vision. Other projects within the hub have been mentioned as well from the Swiss Center and beyond. So with CBDCs in mind, and again, not reaching for a silver bullet here, but CBDCs are by definition a liability of the issuing central bank. And Thomas, I'd like to maybe ask you, how do you see the roles of the public and private sector breaking down in this potential future state of central bank digital currencies and ecosystems?
Well, thank you, Andrew. Well, CBDC is central bank money based on a new technology. So the heard before distributed ledger technology. However, I believe it's important to emphasize that the roles of the private and public sector do not have to change just because a new technology emerges. When it comes to CBDC, our focus at the moment is clearly on wholesale CBDC. Together with the BIS Innovation Hub, we have explored two ways in which central banks can provide central bank money to privately operated DLT infrastructures. Well, first, by enhancing interoperability between a privately operated DLT infrastructure and our existing payment infrastructure. And second, by issuing central bank money directly on a privately operated DLT infrastructure. These two options present different advantages and challenges, and consequently, there are certain trade-offs between them. Well, the first option, involving a link to our existing payment infrastructure, raises no major policy question. With this link, we do not need to change our access policy to central bank money or how we implement monetary policy. However, achieving interoperability requires a high degree of alignment between the two systems. The second option, issuing CBDC on a privately operated DLT infrastructure, raises a series of policy questions. For example, should we grant access to CBDC to the same circle of participants as in our payment infrastructure? And should we also use the DLT infrastructure to implement monetary policy? In our latest project, the so-called Helvetia 2 project, we learned how such a solution would be implemented in technical terms. This explanatory work has shown that issuing wholesale CBDC on a third-party platform is potentially a viable option. Importantly, there is no need for a complex alignment between the platform and our RDGS system. But we should need a mechanism that allows us to retain control of CBDC, especially issuing, settlement, and redemption, and to monitor CBDC balances even at a very high frequency. Thank you, Andrew.
Great, thank you, Thomas. Tony, over to you. I know you've done a lot of work on the regulated liability network as of late, and I'd love to hear your thoughts on that project.
Yeah, absolutely. So what kind of digital money are we going to have in the future? Now, John wrote a great paper that I've read a few times about the distinction between public money and private money. But not all private money is equal. Some private money is regulated and some private money is unregulated. And what we think might be an interesting way forward is if we pivot the conversation away from central bank digital currency towards a concept of sovereign digital currency. And included in that sovereign digital currency, what we might have is a DLT that includes central bank money, but also commercial bank money, and also the money of regulated non-banks. And even in the future, if and when they are regulated, stable coins could form part of that same system. So the concept of the regulated liability network, you might think of as CBDC++. It's a shared ledger that contains the liability of the central bank, but it recognizes that sovereign money also consists of the liabilities of regulated private entities, commercial banks, and e-money institutions. And so we think that this expanded concept of a network, like if we're building a digital pound, if we're building a digital Swiss franc, why limit it to the central bank liability? Why not extend it to the parties, the institutions that are authorized to issue monetary instruments essentially in the national unit of account? So that's the concept of regulated liability network, Andrew, that we believe might be a more positive step forward than a narrow CBDC built only on the central bank liability. Or what also might develop is a number of individual bank coins, which will essentially be like casino chips. There'll be proprietary bank coins that only work within the walls of a given institution. That's going to create a terrible market structure. And also a world of stable coins, which at this stage are hovering uncomfortably outside the regulatory perimeter. So our concept is, yes, let's build a digital euro, let's build a digital Swiss franc, let's build a digital dollar, but build that around the concept of the sovereign currency, which is central bank money plus commercial bank money plus e-money.
Great, and obviously that makes a lot of sense and echoes the existing market structure that we have today, but leveraging modern technologies. But it does kind of bring to mind the potential that we're introducing yet even more complexity into what is already a complex ecosystem that has been indeed built up over many decades. We've got a mix of RTGS systems, instant payment systems, ACHs, of course, SWIFT and wire payments, and potentially in the future CBDCs and regulated stablecoins. So it does seem that complexity is the enemy of efficiency, and that in many ways potentially all of these kind of additional elements are maybe working against this collective goal to make payments faster, cheaper, and more efficient. So John, first to you, could you maybe talk through kind of that statement and how you would kind of position where we are in this transition from old to new, and how long is this phase going to take, and how are we going to get through it?
Problem of interoperability than an issue of complexity. Maybe explain that. So at the moment, and you can see this in the G20 roadmap, we're really dealing with kind of three generations of structures and technology. We have correspondent banking, which is the oldest. We have now pretty new technology in faster payment services that's been implemented across different jurisdictions. And how do you link up faster payment services? And the Innovation Hub in Singapore is doing a very interesting project, Nexus, around that. And then we have potentially new systems, CBDC, stablecoin, possibly using completely new rails compared to the existing bank rails. And there's a lot of uncertainty about sort of which technology is going to, or which structure is going to dominate. My guess is, if you look at sort of previous patterns, is that in different parts of the world and for different purposes, we're going to see all three of those coexisting at the same time. The example I sometimes give is, you've still got the signature stripe and the embossed number on your credit card, but nobody in the UK that I've seen has ever, in the last 20 years, has ever rolled a credit card across. There's now chip and pin and the like, and contactless. But those, for those who still need to use that technology, it's still there. And I actually think the different technologies offer different advantages for bulk payments, correspondent banking, which will avail itself of new technology, might be more efficient compared to for small value retail payments, we're linking up with faster payment services, or coin token might be the answer. So the roadmap addresses all of those. We've very clearly put in the future as well as the past and the present, if I can describe it that way. I don't think consumers should have to choose and pick a technology. We don't want a VHS Betamax type example. We want interoperability. So I'd say Android, Apple is a good example of interoperability, but even more than that. And we have interoperability in our money in the UK and in jurisdictions now. And I think Tony's entirely right. We need to keep that. We need also, and this is one of, so Thomas talked about wholesale CBDC. Of course, we're very actively exploring retail CBDC. And one of the reasons we're doing that is not to, that will be the only digital money in the economy, that it will sit in an ecosystem with commercial bank money, with regulated stablecoin if those come forward, and current electronic and new forms of DLT money, but it might provide an anchor in the way that cash provides an anchor at present, because it enables a holder at any point to say, okay, I have the right to have that asset on demand. And actually the ability to satisfy that requirement is what ties the whole system together. And I'm interested in Tony's framing of this as a sovereign CBDC, because you're using the unit of account. We tend to think of it as an ecosystem, but maybe it's the same thing, that CBDC will not be the only money to be used, but it'll be the anchor money around which other monies denominated in sterling can innovate and flourish. So I'll stop there. Thanks.
That's great. Catherine, I'd love to get your thoughts on this.
I think I echo a lot of what John just said, which is, you know, we have a lot more choices in terms of whether that's ACH cards, mobile money and such. And it's not for consumer to have to pick one over the other. It's more about the optionality that's available for us. So then, you know, depending on the situation, we can switch in between. And I think with that in mind, I think we've been kind of like carving out this network of networks capability as one of the key strategic initiatives for cross-border payments for some time. And I think it's going to just become even more important in the future when you're looking at, I very much think the future of payments is going to be kind of like a multi-hub, multi-network kind of ecosystem. And maybe, you know, taking CBDC, which is a good example, and because this is where the key design principles will kick in. And me personally, I think as a technologist, we spend a lot of time looking at CBDC from very much a product lens and trying to think about, you know, what would make it easy for consumers to use from day one. And that comes to consumer adoption and merchant acceptance at the launch of a CBDC. And this is going back to the interoperability question, because many central banks that we have spoken with face this common challenge, which is how would you make sure that CBDC can be used from day one, by whom? Those are the key questions. And more importantly, how would it coexist and interoperate back to the existing, whether that's banking application, to the existing payment infrastructures. And with that in mind, I think this goes back to, you know, thinking especially CBDC as a retail CBDC or general purpose CBDC. There's a lot of nuances that's associated with it. And this is where we think, you know, how do we envision what a potential retail bridge that can be built, and to support these adoption questions is very key. And then I guess another sort of initiative which we've been spending quite some time is in applied research for CBDC. And we're looking at a lot of these novel technologies, I would say, that has been sort of being experimented and piloted. And certainly, I think highlighting the MCBDC Bridge project and definitely the Project Nexus, I think personally is super interesting. In this space, you know, we have launched a publication around the universal payment channels. Essentially, it's really leveraging cryptographic sort of primitives and trying to think how could you allow sort of in the future if certain stablecoin, regulated stablecoins and CBDCs, or between CBDC and CBDC, these cross-border payments happen. And let's assume that if they're built on DLT networks, how could you facilitate a very secure and instant atomic, actually, cross-border payments between two different networks. So these are very interesting. And I think we have found a lot of resonance actually in the Project Nexus in the way the network is being designed and being proposed. So super excited in terms of what's to come. I guess just to summarize, I do think that it is possible you can have both resiliency and simplicity without killing off these established solutions. And this is where the private sector and the public sector come in to provide this range of, I would say, interoperability solutions that can then bring things together.
Thank you, Catherine. Thomas, briefly, central banks, and I think as John has put it, provide, public goods, right? And this notion of a CBDC as an anchor product in the payments ecosystem has come up. How well do you think we are as central bankers equipped to sort of think about these end user needs as we kind of create this foundation layer? How do we keep those kind of end user needs and those kind of business customer needs in mind somehow?
Well, Andrew, we still have a little bit of traditional view. So we believe that this is mainly the task of the private sector to be very innovative and to see, and also because of competition, it has never been really the task of central banks to provide cashless payment services to consumers. And this is really the traditional role of the private sector. Now, of course, when it comes to cross-border payments, it requires a lot of efforts together, both the private sector and the public sector, but each has to play its specific role. And we heard that before from all the other panelists. For the cross-border payments, there are a couple of hurdles that are quite difficult to jump over. So we have these different markets, different consumer needs. We have these multiple technical systems with different standards. And most importantly, we have these different jurisdictions, different legal systems and different regulations. So this is something that is not easy to circumvent. And there, of course, the private sector or the public sector has a very important role to play. So we can build this robust infrastructure to foster competition and especially to provide a stable currency in electronic or also in tokenized form that can then be used by the private sector. And we can also modernize the infrastructure and to have similar standards. So, for example, this international standard ISO 20022. So all these things we can do in order to help and facilitate cross-border payments. But as we heard before, this is not easy, but we have to do a common effort in order to achieve those goals. Thank you, Andrew.
Great. So we've just got a couple minutes, and maybe we'll just kind of do a wrap up on a positive note and try to give everyone 20, 30 seconds to just maybe talk about where do you think the biggest impact for driving improvements in cross-border payments is going to come from over the next few years? And maybe, Tony, I'll start with you.
Yeah, Andrew, I'll talk about a section of the market that I think is not talked about much, which is corporate cash management. So think about our great multinationals, and not only the big ones, not only the well-known names, but these days lots of middle market companies are born global and want to transact globally. Now, corporate cash management is conducted in commercial bank money. And corporate cash management cannot be conducted in CBDC unless we want hundreds of billions of dollars to move from the balance sheets of regulated financial institutions into the public sector balance sheet. Now, corporate cash management on a cross-border payments is relatively complex, and it's a sphere where we could really use a programmable pound, a programmable Swiss franc, a programmable digital dollar. And so let's go through a kind of Sherlock Holmes process of elimination. It can't be a CBDC because you don't want those balances on the central bank balance sheet. It can't be a stable coin because stable coins are pre-funded. It can't be an individual bank coin. And therefore, there's a great opportunity to build a digital pound for corporate cash management purposes that would be universal. And that leads to this conclusion of, let's have a broader idea of digital sovereign currency, not limited to the central bank balance sheet. And I think if we can get there, we can actually work together in the public and private sector to solve real problems for companies that drive economic growth. So my plea is, let's raise our head above the parapet slightly. Stop thinking about central bank digital currency. Start thinking about a broader concept of sovereign digital currency that will address a range of universal use cases. That's my pitch, Andrew. Thanks.
Tony. John, I'm going to go to you, and we might have to wrap up. We're out of time, so I'm going to give you the last word.
So look, so huge and exciting developments in technology are going to drive improvements across all of the different channels. I think retail is actually where we'll see the biggest difference, because I think, as Catherine said earlier, we're seeing volumes of retail cross-border trade just grow and grow, and I think that will continue. Thanks.
Great. Well, with that, I want to thank all my fellow panelists so much for your time today and your insights. I clearly learned a lot, and I think our viewers will find this session very enlightening. I want to encourage everyone to please stick around for the remaining sessions at the BIS Innovation Summit. And thank you so much for joining.